Hi, welcome to this video day. It's the 21st of July. In today's video, I'll give our updated outlook for the euro. Now, in terms of pairs we'll look at, we'll look at Euro USD, Euro JPY, Euro GBP, and a euro correlated currency against the USD, which is going to be USD Czech krona. We'll go to the charts in just a moment. Now, today we did have an interest rate hike from the ECB, which was more than expected, but it's not going to help the euro move up much in our view from here. We think the euro is going down. The ECB kind of did a dovish hike. There's huge problems in the zone. The ECB cannot solve them. I want to go through our logic of being short the euro and also the key levels of support and resistance to look out for. So what we'll do now is go and look at the trade setups. But just before we do so, always please do keep in mind, it is my view as of right now. It can of course change in line with the market action and conditions. If you want to learn all our trading techniques and check out our daily technical sentiment analysis of 14 FX pairs, including the 4 we're going to look at right now, simply click on the link beneath this video and you get live access to our member center. You can also follow our Facebook page and join our Facebook group of traders if you wish. Right, let's go and take a look at the opportunities. Euro USD, and it's basically been in a downtrend this year. We had a bit of a rally into the ECB. It's ECB day today. You can see still up on the day, but off the high. I think upside from here is limited. And we're going to have a really big breakdown in the euro. Longer term, we're looking for 96 and then a possible run on to 90. Now that's based upon what is going on in the zone, the big fundamentals. Now, in terms of today, we obviously had the ECB. A lot of people are taking the rate hike, which was 50 basis points, which was more than the expected 25 basis points, which we expected as well. They're taking the bigger rate hike as bullish for the euro. It's not bullish for the euro in our view, because the ECB are basically front loaded. Okay, so basically I wanted to get the rate hike in to just get out of negative rates, and I agree with this view from ING Think. Hiking rates by 50 basis points and softening forward guidance, they're just going to be data dependent, shows that the ECB thinks the window for a series of rate hikes is closing quickly. I think that's true, actually, because the zone is in terrible trouble. It is heading into recession, although ECB President Christine Lagarde says, yeah, the ECB don't see that coming. It is coming. Okay, now the zone, there's a lot of problems with bond yields. All different countries have different interest rates, and you probably read in the news about Italy. Italy's borrowing costs have spiked to the upside. Now, the ECB have unveiled a new tool to deal with this problem in Italy or other countries. It's called the Transmission Protection Instrument. And what it says is basically the ECB will buy bonds from countries that have their borrowing costs move up, provided they stick to sound economic policy. So what you've got is the ECB wanting to raise rates and then saying they might have to buy unlimited bonds to stop poorer nations from defaulting. It's ridiculous. But the ECB is in a really difficult position. It's the hardest of any central bank, as this lady here points out, Seema Shah. The ECB is hiking to a slowing economy facing a severe stagflationary, when inflation is high and growth is low, shock. That is quite beyond its control. It is. It's to do with the Russia-Ukraine crisis, obviously. We'll also have to face an Italian political crisis, which presents a difficult sovereign risk dilemma. There is no other developed market central bank in a worse position than the ECB. There isn't. They've got an impossible task. In our view, the ECB, they're trying, but they're powerless to stop a recession. Okay, situation is pretty critical in Eurozone. Now, a lot of people are looking for another 50 basis points hike in September, but here are rate expectations. They're going down. So basically, people are seeing that the ECB are probably not going to be able to hike by 50 basis points down the line. So yeah, it's not looking good in Eurozone. I just want to go to some more charts which are over here. Sorry. Some of you may have seen some of these before, but I'm just going to show them very quickly about the problems in the zone, obviously. This is 10-year government bond yield spreads, Italy over German bunds. And you can see they're going up. Italy cannot take higher borrowing costs at all. So we'll see what the ECB does. It also doesn't really have a government at the moment, which doesn't help. In terms of recession in Eurozone, I've shown these charts before, but just show them again for new viewers. Two Western Europe economies on the front line of the war in Ukraine, Italy orange and Germany blue, have their manufacturing PMI chart 1 and their forward-looking orders minus inventory second chart falling sharply. Eurozone is going into recession. These charts have actually got a little bit worse. I posted them a few weeks back, okay? So you can see basically diving negative. Chart here from TS Lombard, I think I've shown this one before as well. The manufacturing recession is already in Eurozone, okay? What about the gas? You could get a total cut-off of gas. I don't think that's likely at this moment in time. I think the Russians will just keep reducing it. But the actual hit on GDP will be big, okay? You can see these charts in my weekly update. Have I got another chart? Yeah, I'll have this one here. This is from JPM Morgan, who think basically in terms of, if you have a really adverse scenario in Eurozone, you could push Euro USD to test the 90 level. I think that's coming actually. Growth revisions going down. If you get cut off of the gas, I don't think it's going to come yet, but it might come. Just turmoil in the zone, and there's nothing the ECB can do about it. Now, on the other side, the Fed will be hiking rates next week. They're going to do 75 basis points in our view, not 100. I think the market is looking for that now. I think in terms of the euro, limited upside and plenty of downside. So let's go and look at some levels. Euro USD first. Right, Euro USD daily chart. This comes from our member center. For anyone new to our videos, and we do our charting, keep it simple. I've already got bias from the big fundamentals and sentiment, which makes us bearish. So we're only going to focus on big levels. Okay. Now, in terms of euro, we've been bearish all year. We've had some decent short trades out of this pair. One recently, which featured in videos from the above the 107 level, just got stopped out on the rally there as we came up towards 102. So we're really looking for the bigger moves if we can get them. Okay. Now, in terms of this euro rally, I just see it as a correction of oversold, and I think we've got a lot of downside. You can see my target's 96, possible run on to 90, so near enough 600 pips the first target, a lot more obviously the second. They're longer term targets, but just the Eurozone is in just such a terrible mess in our view, and even the ECB couldn't manage to get a sustainable rally going. I know we're blue on the day, but off the high, I feel any rallies now should fade to these resistance levels. Okay, now in terms of if you wanted to trade short, you'd obviously sell off the resistance levels. Okay, if we don't rally, I would go through these bodies here. That is 101.30. Then you can have your stop, in my view, behind this first level resistance. At the moment, it's behind the second level for us. So yeah, I just think upside limited, a lot of downside. So we'll see what happens with this one. Next pair I want to look at is Euro JPY. So Euro JPY, then in terms of the yen, we viewed it as most oversold major currency. We're looking for it to, longer term, have a good rally. Now, in terms of the background in the global economy, we're going into a big slow up, and we could go through a global recession. That's very bullish for the yen historically. Okay. Now, in terms of this pair, we're in it already. Came in at 148. We actually came in yesterday on the red. We just moved slightly in our favour But what I'm really liking is this tail exhaustion. Yeah, we're 200 pips away from the high, okay? Now, in terms of playing this one, you could do it two ways, on a break lower or a rally. I just want to show you it on this chart. If we rallied up to here, okay, you've got basically four bodies together. Hopefully you can see them. About 141.40, the two here, two there. You could sell off the level with a stop behind the tail. We've got ours at 142.50. If we don't go higher, go through the round number at 140. So I go get clear of the round number, 139.80, and then stick the stop back behind the first level resistance. I'd say 141.60. So you can go for a move back to these bodies and those there, or just take a break of support with a stop behind there. I think there's plenty of downside potential. Nice exhaustion tail. Euro GBP, pound, second most oversold major for us, and those pairs been pretty scrappy. But I think the euro now could be done on the upside. I hope I don't curse the trade. But again, okay, we're blue on the day. Look at that for nice exhaustion. We can break these double bodies here. 84.90 for us. See if we run to the downside. I think we could get to chart lows. Stock can be just back behind this resistance level. I got it at 85.60. I'll probably bring that down a bit to 85.50 on a break. Lower risk to reward, really good. Obviously, if our view is correct. But I think, if you look at it, interest rates favour the UK, and I think the UK economy is stronger. So yeah, I just think the pound due to rally, or the euro's due to go down on the pound. Right, let's go to our last pair, which is USD CZK. Right, USD Czech krona. Why do we like this pair? In terms of euro correlated currencies, the euro goes down. They can very often be dragged down by the euro and go down quicker. Now, in terms of the Czech krona, not only does it have a big exposure to Eurozone, it also has a really big exposure to the Russia-Ukraine conflict. That's not getting better anytime soon, in our view. We've seen the USD dip back, and we think the dip is a buying opportunity. Now, in terms of risk we're going to take, it's not much. Okay, I just want to show you the monthly chart. Okay, so basically just below the 24 level, we're looking for 26. Okay, now in terms of on the daily chart, it's probably changed slightly since I did my chart. Yeah, we're not too much different, but the actual risk isn't much. We're only risking it back behind these candles here where the big blue broke up, which you can see, sorry, better on my chart probably. So this level here, big breakout, tail poke towards it, back, and we're slightly away from the 20-day moving average. So if that turns through the open blue, I think that is a buy. Risk to reward, I think, is about 5 to 1. There's other euro correlated currencies or proxies that look good, but I think this one is my favorite one. So yeah, so there's our view of the euro. We'll see what happens, but yeah, ECB, a lot of people or forecasters saying it is good news for the euro. We're not seeing that in the market reaction though. So anyway, we'll see what happens. I will update these pairs in the weekly forecast, but that's it for today. Thank you very much for watching. I hope you found the video useful.